Hey guys, welcome back to the channel. Hope you're all having a good day so far. Today's video is going to be on Li Auto, and if you find this video helpful, please consider subscribing and hitting the thumbs up button. That said, let's get started. In this video, I'm going to go over an outline just so you guys know what to expect. I'm going to start off by talking about a brief overview, then go over the business model and some pros and cons, and then briefly look at the chart. And in this video, I thought it'd be appropriate to go over my high-risk stock trading strategy, assuming it's commission-free stock trades. It's a fairly simple strategy, but yet effective for me, so I thought I'd share it with you guys. Next, I'm going to go over deliveries, then a word of caution, and then the key takeaways. Li Auto is a China-based company that specializes in EREVs, meaning they're extended-range electric vehicles, powered by either electricity or gasoline. So their SUVs are going to include a gasoline-powered generator that recharges batteries while driving, serving as a range extender. Basically just a fancy way of saying the vehicles are hybrid that use gasoline to extend the range of their cars. So they're going to have a fuel line. Li Auto's business model is to bridge the gap between gas-powered and fully electric vehicles. Supposedly they're going to be a niche Chinese value SUV market, providing large SUVs with performance functionality for the price similar to a premium compact SUV. Li Auto's target consumer? Those interested in EVs but prioritize the spacious SUVs and their price point. Whether this is a limited window of opportunity is certainly up for debate. And everything else aside, I actually like their business model. Some of the pros: they avoid direct head-to-head competition with NIO and Tesla, and they're filling a space of weaning consumers off of gas-powered vehicles. And my favorite pro is that they compensate for the lack of the Chinese EV charging infrastructure, which currently is a problem, and less importantly, the lower price point in a time of economic uncertainty is always a positive. And moving on, Li Auto should be able to capitalize on the growing Chinese middle class that wants to drive cleaner and larger vehicles. And as an extension to my last point, vehicles can still operate by an auxiliary power unit when charging stations are not immediately available. As far as the cons go, I would say they're using an older technology with, one could argue, has a limited runway. They're also building from the ground up instead of converting, as in the case with Hyliion. And I just want to mention briefly the chart before I get into my strategy, that the shares of Li Auto are still undergoing price discovery, basically just meaning that the market has still yet to define a bottom and a top price range. So of course, there's not going to be a base yet formed. So it's very risky, in my opinion, to buy shares at such an early stage. Okay, so on to my trading strategy for high-risk stocks. Let me start off by saying that I'm not telling you how to trade. I'm simply telling you how I would trade this stock. You can take what you want from it, you can ignore it, you can modify it, completely copy it. It's your hard-earned money, so it's up to you. Step number one is to establish a dollar amount that I'm willing to lose. Must be a small slice of my overall portfolio worth. Let's use $200 as an example. The next step is going to be to pick a price target for an initial position. Very difficult with a stock like Li Auto with a recent IPO and no base yet established. So for example, let's use $16.60. So the first thing to do would be to divide 200 by 1660, and that takes you to 12 shares. And so these are the only 12 shares I'm going to buy. I'm not going to buy 13 shares. I'm going to stay disciplined with my $200, only buy 12 shares no matter what happens to the share price. Next, on step 3, I buy 1 to 2 shares, and because it's only 12, for me, I would just buy 1 share at $16.60. And that's going to leave me with 11 shares to work with, no more. And the fourth step to my very simple process that I use is to only buy 1 to 2 at a time if it lowers my cost basis. So I'm going to be buying 1 at a time because it's only 12 shares. So you can't just pick a number that's a penny less. You need to be reasonable, pick a dollar amount or a percentage and stick with it. So for this video, let's just say I'm going to pick $16.30. I wait for it to go down to $16.30, then I buy it, and then that brings us to number 5, which means recalculating the cost basis, which then would be $16.45. And then for me, it almost becomes rinse and repeat. You do the same thing over and over again. So you have the new cost basis of $16.45, pick either a dollar amount or a percentage and stick to it. So if you're going to use $16.10 for your next price target, use that, stick with it. Only buy your third share if it goes down to $16.10. And I keep recycling this process, continuously recalculating my cost basis each time I buy a new share until my 12 shares run out. And if you notice, when you're finished purchasing your 12 shares, you're gonna have money left over because your first share was $16.60, but that was the highest price you paid. So you're gonna have money left over. And for me, I either buy a new share or I just use that money and spend elsewhere. And that brings us to the last step, number 8, which is to set a sell price target range. That's simple. And don't make exceptions. And that's my process. It's very simple, but for me, it's not how I buy and sell Apple or Microsoft, but this is the method I use for high-risk stocks. And one thing I forgot to mention is what happens if the share price bounces after the first initial purchase, or if it never goes below one of the new calculated cost basis. For me, I just give myself a reasonable amount of time, and then after that time period has elapsed, I either I just let it ride with those shares, less than 12 obviously, or I just take my profits and move on to another stock. And so again, this is a very, very simplified process that I use for high risk stocks. And if you guys have any questions, feel free to leave a comment below and I'd be more than happy to chat about it. And very quickly, there are some price targets out by analysts, but in my humble opinion, some of them might be biased, maybe not, but for whatever reason, I'm still not going to take the price target seriously, so I'm just going to move on. Next, I want to mention that Li Auto is going to be using their cash to expand its direct sales and services network and to expand their geographic coverage in China. And next, it looks like their numbers are pretty good. They delivered about 2,700 vehicles in August, up from 2,445 in July. Year-to-date deliveries, 14,656. And my favorite statistic, the July-August deliveries of 5,156 is compared to 6,604 for all of Q2. So to me, that's fairly impressive. And it seems fair to mention at least a couple drawbacks to Li Auto. One being that tech companies in China are facing more and more scrutiny in the USA, and that's probably going to spill over to the auto sector. And you can't forget Lunkin Coffee. Personally speaking, I lost probably 90% of my worth in Lunkin Coffee, and honestly, that is something that I'll never forget. Luckily for me, it wasn't a very large portion of my portfolio, but honestly, it was devastating. So that is always going to be a factor when I'm considering purchasing shares of a Chinese-based company. And that brings us to the key takeaways. One being that Li Auto is not a pure EV company, but does it matter? That's a great question. I think we should discuss that in the comment section. Number 2, they use older tech, but they have a unique business model. They have increasing deliveries, and last but not least, they are a Chinese-based company. So something to think about, and that concludes this video, guys. I hope you enjoyed it. If you did find it helpful, please consider subscribing and hitting the thumbs up button. That said, I hope you guys have a great rest of your day, and I'll be talking to you guys soon. Take care.